Here we are.
All right. So the Bitcoin ETF this week, what's been going on with that?
We've had significant inflows.
Yep.
Almost $1 billion.
Okay.
And so there's talk of that maybe sparking interest in the broader bull run taking a run. I think if we get sustained inflows at $1 billion a week, we're gonna that's kind of a sign that there's more interest. And
right.
And so hopefully, what we talked about last time was things were a little slowed down.
Right.
Maybe that's just the consolidation, and we're going to take a leg up because of more interest. It's not really clear yet, but it does look like it's turning. And Grayscale doesn't seem to be bleeding as much.
Right.
It's also down to about the value of assets as IBIT. So they've come back down into parity in the market. They're no longer the Goliath that they were at 40 billion. So they've taken a haircut.
Right. And Bitcoin's up to 66 today, 66,000.
Yeah.
Do you think the ETFs are yet driving the price of Bitcoin?
No, I think we're range bound right now.
Right. Okay.
It does appear that we're in a channel.
Right.
It's not really. A lot of people are saying a lot of different things, so it's not really clear which way we're going. If you look at the historical cycle, we're at what some people like Raoul Paul are calling the banana zone, where things are supposed to loop up, just based on how they looked previously.
Right.
No guarantees there, but that's one of the views. Other people are saying there's not a fundamental shift for going higher. So it's all over the map. Right
so
now.
if this $1 billion like this, you were thinking a week, is pouring into the ETFs, why is the Bitcoin price not spiking based on that yet? Because they have to be buying their Bitcoin somewhere, but they're obviously buying it off chain, right? They're getting it on the ledger at Coinbase.
Well, somebody holds it,
right?
And they're selling it. But if they're selling it like a peer-to-peer thing and it's not on an exchange, then you're not putting pressure on the open liquidity.
And that's why we're not seeing the price spike on Bitcoin, even though this money's pouring into the ETFs.
Yeah, I think what we're doing is we're taking it out of from under the carpet or under the seat cushion and whatnot, and taking all of the stuff that's laying around and kind of sucking it up slowly.
Has anyone identified the BlackRock wallet for IBIT?
So there are some challenges about wallets, and people are saying that there's not as much transparency there as they'd like.
Yeah.
There's a hunt on. There's a digital hunt on for wallets, but there's also obfuscation in the custody, because Coinbase is the custodian. And is it in a Coinbase wallet? Is it in a wallet that was generated by Coinbase for the purposes of a client?
Yeah.
We don't have that kind of transparency, so we don't really know, exactly how they're playing the game of holding the asset. We do know that they have a requirement to hold the asset through a custodian, and that the custodian is Coinbase. But Coinbase is a big player, and they have lots of, it's a many-headed beast.
So actually, just using BlackRock as an example, they don't have to have a wallet. No. The custodian is Coinbase, so they're the wallet.
Yeah.
So
if they were, well, think of it this way. Let's just say that you have these assets and you hold them in cold storage, and so just like you might hold the shares of a traditional firm. Where you put them in the safe and they're stored in the safe.
Right.
Well, you got some for this client, some for that client, some for the other client. Now, those might all be wallets in your name digitally, but they're all basically in the safe or a separate safe for each customer, depending on how you want to look at that.
Yeah.
But it doesn't have to move. How much movement do you need if they just transfer ownership of the wallet itself?
Right.
I mean, what if they put $100 million per wallet, and then that's like the max, and so they have or so many Bitcoin per wallet or something like this, and so that the transfer occurs and it's 25 Bitcoin or it's $2 million worth of value. However, there could be a structure in there where they don't actually have to move it on chain.
Right. It's just sitting in a ledger at Coinbase, and they just identify that, BlackRock now owns this, but it doesn't move anywhere.
Yeah. So I don't know how that works with commingling of customer funds and those kinds of laws with the SEC or the financial regulators.
Yeah.
But I do know that I'm sure that they could find a way to segregate without having to show their cards.
Mm-hmm.
And so that's part of what they're doing is they're not showing their cards. And maybe that means there's a Bitcoin in a bunch of wallets and they just take a bunch of ledgers and put them in a physical safe. I mean, I don't have an answer for that.
Yeah.
Right. But I know that they're playing a game with the custodian for how they acquire it and how they hold it.
Mm-hmm.
And so this is making it hard for digital sleuths to put their finger on exactly where that asset sits.
Right. So there may never be a BlackRock wallet that people identify. I bet there's not going to be.
I don't know why that would be good for them. So
right.
I don't know why they would share it. Right. So you're going to have to find out if there's a way to look at it. You'd have to find that. They're not going to share it.
Yeah. What do you think's incoming this week on the ETFs? Anything?
I would like to say that there's more inflow, because I'm an optimist in crypto, but it's not clear that that's what's going to happen. I will say there was kind of a pause and numbers were small.
Yeah. And
now the numbers have jumped back up to being higher than the average. So if you look at the last 3 days, they're over 200 million in the first, in one case it was 300 million, but our average was down to around like 140 million a day inflow. Mm-hmm. And so we're beating that average now again this week. And that's, we started slow, but that's a sign that maybe things are changing, that there's more demand. There's some talk that different kinds of funds are looking to get invested in and I can't remember names right here off the top of my head, but I do remember looking in the crypto news and hearing that some more traditional like retirement funds were looking at adding Bitcoin specifically to their portfolio.
Right, getting them to one of the ETFs.
Yes.
Yeah. That's going to, eventually that will happen. If it's not happening now, they're going to want that exposure. It's the best way to get exposure.
Yeah. So, like I'm not real big on the finance, but I do listen to some people that are like professional financial advisors, and they're talking about this stuff, and they're starting to talk more reasonably about crypto. It used to be, I can't talk about that. It's not legal.
Right.
Right. And now it's become, there are situations in people's portfolios where it makes sense to have this kind of asset for the purposes of balancing the portfolio. And that sounds a lot more like a fiscal responsibility process going on, where they're evaluating the asset on its merits and saying it has some merits in certain ways for certain customers. Okay. I think that's going to grow, and that the acceptance of that is going to grow over, years. It's probably going to take years.
Yeah.
But the reality of the requirement is, as a financial advisor, they need to be aware of the kinds of investments and how they would play for a customer.
Right.
And whether or not they would be useful for a customer is something that's their responsibility to know.
Yeah.
So that's putting pressure on them to learn about crypto in a big way. Right?
Yeah, we were talking earlier how much money is poured into these ETFs compared to other traditional ETFs.
Oh yeah, by far. The ETFs, IBIT alone has set the record. Now, IBIT and FBTC are the two that have dramatically beaten every other ETF that's ever been released.
Right.
So IBIT made it in less than 50 days. I think it was 49 days.
To what point?
To $10 billion in assets. And FBTC, I think they took around 80 days or 75 days, something like that, to reach $10 billion in assets. The next nearest ETF to reach $10 billion in assets took 640 plus days.
So that would
50 days. That's like 2 years.
So that would explain why a fund manager or someone that's representing other people's money can't avoid this. They have to look at this. They have to. It's irresponsible not to be looking at this. Yeah,
that's the deal. Is that they're, as a professional, they have to take their emotion out of it. So whether or not if I am not a certified financial advisor, if I was a certified financial advisor, and I didn't know about Bitcoin or ETH or any of these other
just ignoring assets. I don't want to know.
Yeah, I don't like that stuff. Or crypto's all for scam or whatever was what everybody told me.
Right.
At this point, it's going to start becoming a professional responsibility for me to investigate and learn and become knowledgeable.
Yep.
Right. So that's going to start opening the door. You don't learn crypto overnight. That nobody becomes an expert in a week or a month or,
right.
or 3 months. That's not how it works.
Yeah.
Now, can you become knowledgeable about a specific crypto? Sure. Yeah, that's not that hard. But really understanding the basis of the community, the social structure of it, and it's very social structure oriented, can take years.
Oh yeah.
And being able to get connected to what's hype and what's more substance in the crypto world, you need to be discerning. There's a lot of terminology to understand. There's a lot of
absolutely
of things that can bog you down, but they're going to have a professional requirement to learn.
Right.
So it'll start with the Bitcoin and it'll grow.
The knowledge is huge what you have to learn. I mean, you could take an 18-year-old kid and say, okay, I'm going to teach you about the financial system, but they already know a lot about it without knowing about it. They know how a credit card works. They know how to swipe a card. They know what cash is.
Right.
But you introduce someone to crypto, how does the blockchain work? Oh my God, there's a lot of information there. That's a huge topic.
Yes.
Then you get into what is proof of stake, and then what is Ethereum, and then you get into these other altcoins, and then you get into degens, and you figure out the DeFi. It's a huge ecosystem that someone is not. I didn't learn it. I still don't know, and I've been hanging out with you in the groups for years now.
It's a huge underground thing, and it's going down the rabbit hole. And the farther
absolutely.
you go down the rabbit hole, the more that the
more you don't know,
the more you're a degen.
Right.
The more you're hanging out at 4:30 in the morning because it's mint day on your favorite thing that's coming out of France, and you're trying to do it on your phone while your wife's sleeping in the bed next to you. I almost got my NFT, huh? What? Never mind, it's okay.
Yeah,
it's
humbling.
Well, and
it is.
It's really impressive how fast it grows too.
Right.
I mean, the number of people realizing that there's value to be had and how they add that value to their world is it's mind blowing.
Mm-hmm. Well, speaking of mind blowing, let's drop into GameStop.
Oh,
so GameStop in the last month has had a little bit of action, but maybe we need to talk about GameStop how it was a couple of years ago.
The story is incredibly layered and very interesting. That's for sure.
It's wild.
And it popping back up kind of highlights that there's this rich history in crypto space. And, even though GameStop's not a crypto stock, a lot of crypto native and Web3 friendly people definitely jumped on that bandwagon back in 2021.
Well, that's what got me into crypto in the very first place was when that happened. I remember I was listening to stuff on my headphones in the gym, and I was paying attention to this GameStop thing that's going on. It was like, wow, someone's getting screwed here, and it's us, right? It's very manipulated, and finally someone's going after the big guys. The big guys hate it. Maybe there's more scamming going on in our traditional markets than we thought about. And that's what dropped me into crypto in the very first time. So I'm relatively new to crypto.
So that's
GameStop, what did it.
So GameStop orange pilled you.
Absolutely it did. Absolutely.
Okay.
And then it was Raul Paul. I watched a video and he was just talking simply about Bitcoin versus Ethereum. Mm-hmm. And investing in Bitcoin is like investing in gold. And investing in Ethereum was a programmable network. It's like investing in the original internet. Not just an internet stock, but the internet in a way. Right. And that made a lot of sense. So again, that's kind of close to my heart, this whole GameStop thing. That's what started this for me. So let's talk about how that started. So then
you should know the whole story.
Oh, I do not, because I don't understand. I know more about crypto than I do traditional markets now.
Okay.
I'm not a stock investor. I know what the terms are. I know what short selling is, which is what the GameStop mess is.
Well,
it was screwing over the short squeeze.
It's actually a short squeeze.
It's a short squeeze. They were screwing over. Let's go into that.
Okay.
Let's talk about that. So how did the GameStop thing start? It started on Wall Street Bets, a Reddit subreddit.
So there's a guy named Keith Gill.
Okay.
And Keith's known as Roaring Kitty on Twitter or X. It's X now. They've actually eliminated that URL. But Keith is I don't know if he still is, but he was a CFA. And he was doing his own investing and whatnot. And he recognized that he had a feeling that all these companies that were getting shorted, like GameStop, that maybe there was more to it than that. And GameStop in particular caught his eye. And he started investing in, I think it was like 2019 or in that time frame.
Okay.
And he just kind of felt like there was going to be a pump, like it was going to have to go back up because people were underrepresenting what it was worth.
So the short guys, the big money guys that were shorting it, We're wrecking the company.
Well, so if you look at, they're betting on the loss of the company. They're not necessarily wrecking the company. I mean, maybe you could say it that way, but what they're doing is they're saying, in my opinion, that market is dwindling.
Okay.
So that company's market share is getting smaller, even if they're maintaining their percentage in that market, because that market is falling.
Mm-hmm.
Okay. And GameStop was super big when console games required a disc,
right? You have to go in and buy one,
a cartridge, or something like this, where I'm going to go get my new controller to go and work on it, or the new 3D game for my Xbox thing is coming out, or my PlayStation, whatever it is,
or selling games back. You take your $65 game and they give you $2 for it.
Yeah, they had a used game market, right?
Yeah.
And I don't know if they still have that or not. I haven't been in a GameStop in years.
Yeah,
but the point was that they recognized that the era of disc media died, or is dying, and streaming and downloading directly into the console started to become the model.
Right. So who needs a GameStop?
Right. Well, what it did was it meant when the game was ready, and it wasn't the game is ready, and now we have to print off a bunch of DVDs and CDs to make it all go out to all the people. It means we spin up Akamai with some mirror servers and download that thing and send me some money. And that meant faster payout, and it meant less overhead.
Yeah.
And so that looks very much in the businessman's model like a winner, and like the console is a loser.
Yeah.
And so it's a natural bet to say, hey man, that guy's going to keep going down.
Right.
If I can just keep shorting his stock as it goes down, I'm going to make a lot of money on the way to their end. And I think they're going to the end. That's why I'm shorting them. Or I think their future is less, and that's why I'm shorting them, right?
Yeah.
So that kind of most people that are casual investor or whatnot are not big players. They don't look for shorts.
Right.
They're not trying to hurt companies. They're not trying to.
They're betting on the wins, not the losses.
Yeah, they're optimistic, not pessimistic in the market. And when you look at a long, you go and invest. When you invest, say you invest $100. That's the max you can lose is the $100 that you invested.
Right.
But if you're short on a company, if you're playing these fancy games and you go and you put $100 in, and that stock goes from $100 to $500, well, you shorted. You don't own the stock, and now you have to produce the stock.
You have to buy it back at that $500.
Right.
It's a huge loss.
So you're paying $500 and you're giving it back to somebody who you bought it from for $100.
When you thought it was going to go down to $2.
Yeah.
Right.
So the loss you can suffer is higher than the amount that you gamble. Like you're gambling on a certain amount of that asset.
Yep.
But your losses are essentially unlimited based on the upside potential.
So Roaring Kitty sees this coming, right?
He sees this coming long before it happens, but
because he can see the shorts.
Yeah, no. Well, you can see short. You can. That's something that you can't find out who, I think, but you can find out.
You can track the
interest.
Yeah.
Again, I'm not an expert in the financial
we can be
markets
off on
or any
a
of that
little
stuff,
bit of this.
but the reality of it is that there's a way to measure what's being shorted, and he realized that they were being shorted more than the shares of stock that are issued, and that means that somebody shorted the stock and then sold the shorted stock to somebody else shorter.
What? Okay.
140% in shorted interest means I borrowed and then I used it on somebody else who did the same thing I did.
Okay.
That's how I got past 100%.
Right.
Because after 100% have been borrowed, how do you borrow more? Right. Okay. So it's borrowed from somebody who borrowed it.
So he's seeing this.
He sees this, and he knows this is pretty heavy short, and that they're in a bad position if GameStop has potential.
Right.
He feels they have potential. He feels they have deep assets, I think is what they call it.
Do you think that's legit, or do you think he was saying, hey, let's all get together and take someone out? Or do you think he really thought, hey, GameStop has legs. This is a legit company that shouldn't be destroyed.
So he's a certified financial advisor at the time.
Okay.
And he's analyzing market players and market participants.
Okay.
And he thinks he sees something that could be to his advantage, and he starts putting his money where his mouth is.
Right.
This is not somebody screaming pump, pump, pump. This is somebody who is a member of Wall Street Bets. I don't know if we mentioned how it started, but
on Reddit.
He's a member on Reddit of Wall Street Bets.
Yep.
And he starts talking about this investment thesis of his, not by telling people to go get involved, but sharing what he's learning about it, sharing his wins and losses on this. Okay. And somehow in January of 2021, there was an epiphany moment for people in that group, and they started to grow. The group grew by 1.5 million people in 48 hours.
It's a lot of people into a new subreddit.
Fastest growth of a Reddit subgroup ever. So they went from like 4.5 million to 6 million members, but it also like galvanized on this move because the short squeeze, the stock was worth 17.25, and then people started buying the stock, and it pushed the stock up, and that caused a frenzy. And so that news spread across this Wall Street Bets Reddit, and then it jumped into Telegram, and then it jumped onto Twitter, and it just exploded.
Okay.
And all these people were like, oh, let's get in on this and screw those hedge funds because the hedge funds are shorting them, and all those hedge fund guys, we should put it to them.
So at that point, it's not just one guy saying that there's some deep assets in GameStop. It's a group of people saying, let's band together and let's punch back.
Yeah, well,
against the system. Let's
punch these guys for sure.
Back.
And it wasn't just like us, it wasn't like 10 people trying to pump it up. It was like, it became a frenzy.
Well, you're talking 6 million people paying attention to this just on one subreddit.
Yeah. And so we're not saying all those people were like posting, but they got the fever.
They're looking.
They got the fever. So they started going to buy GameStop like crazy. And they bought so much GameStop that they forced Robinhood to stop trading. So in the middle of this process of GameStop going sky high and the shorts just taking it, like getting a beating, there is this halting of the trading.
And they did that with Citadel. Citadel is the person like that. It's a clearinghouse, I think, that I'm pretty, we could be off on this, but Citadel's involved there with Robinhood and why they stopped. And they got very suspicious.
So probably Citadel's friends were losing, and there was reasons for them to start asking for the money. But there's a lot of, I don't want to speculate too far on things I don't have a lot of depth in, but there's a requirement that the exposure of the company like Robinhood has to be covered at the clearinghouse while it's in process. And so if Robinhood can't settle what's in process, they can't add more once they reach their limit without putting more money in.
And they only have so much money.
They only have so much money. And so they had a big growth in users who came from this big growth in Wall Street Bets subgroup. And they all wanted to go after the same asset or same assets. There's actually 25 assets that pumped at this time because the thesis wasn't about GameStop. The thesis was about short squeezes and about deep assets, and whether or not companies that were shorting in a way that was manipulative or whether it was a legit gamble. Right. And there's a perception that people that short are betting on the closure or the loss of jobs or whatever it is. So the negativity. And so the common person who might have that job has a negative view of the people who short. Right. Because that might be my job next week. Right. So there became this kind of, we're going to use Robinhood, the app that's supposed to help the people take from the rich and give to the poor. And we're going to use that to take from the rich and give to the poor by pumping the price of the stock and burning down these hedge funds. Well, I think it was 3 or 4 hedge funds that are kind of buddy. Even though they're all cutthroat, they're still buddies. They go to lunch together. Eat at a nice restaurant.
They know each other.
They all start taking it hard in the shorts. Well, next thing you know, Citadel's stopping the trading. These guys are repositioning to get their butts out. But one of those, Melbourne Capital, lost 49% that night.
They got taken out. Eventually.
They closed
22
and 2. I think it took a year overall, but they essentially closed within a few months. That people realized that, that's those guys.
Right.
They are not smart. We don't put our money there. They lost half in a day. What would they do with my money? I'm not going to touch them, kind of a thing, right? They became pariah. Even though they covered their loss by borrowing money and all of that. They didn't have the capital to do it. They had to borrow from another hedge fund.
Yeah.
And that's like, imagine going to your golf buddies and razzing each other about how much money you make at your CEO job and my CIO job and whatever, and then having to go with your hat in your hand and say, dude, I need to borrow money on my house. There's a call on the loan for my house. I need like X million dollars.
Yeah, but imagine that's $40 billion.
Yeah.
The only, I mean, after that job, the only thing you can do is become an economic advisor for the government. Right. Then you're highly qualified to tell us how to live our lives.
Yeah, I got to think that
he didn't disappear.
If you take that kind of a haircut, it's going to be remembered.
Oh, it will be remembered. Well, Larry Fink with BlackRock originally years ago took a really crazy bet, and I don't know the technicalities of it, but he took a crazy bet on something and it wrecked it.
Okay.
So that's why people are like, anyway, that's a whole another story. How high did GameStop get during this frenzy? It started, we were on the $17 range, right? When it started?
Yeah. So like the second, third week of January, something like that, it was 17 and a quarter.
Okay.
It peaked over 500. It was $504 and it went up. It went that high within 48 hours.
Boy, those short squeeze guys. Some guy was sitting in his Ferrari shitting his pants.
That's a squeeze.
Yeah, that's a squeeze.
Talk about diamond hands, man. That is a squeeze.
Right. Yeah, absolutely.
Yeah. Can you imagine while it's still going up, you're looking at it and you're at, $400, $420, $440, $460, $480. You're just watching it go up and like you can't get out.
Right. Because it's timed. They're short.
You need more money than you have,
right,
to available to you to get out. That means you have to go sell something else to get the liquidity to be able to get out of this thing. And this thing is going faster than anything else you've ever seen.
Yep.
Yeah, that's got to be very depressing. Mm-hmm. I'm sure this is the kind of thing that led people to jump out of windows in 1929.
Probably.
Right? When they watched it fall faster than they could get out, they lost everything. I'm a destitute man with all these bills. I have nothing to live for, and they jump out the window.
Right.
I don't advocate anything like that. I think there's more to life than money, but I can see what happened. Mm-hmm. It's not that hard to understand it. There's a inconsolable loss.
And when this happened with GameStop, it didn't just affect these stocks. It affected crypto. It affected, you were saying, the metals markets. Right.
Yeah.
There was a ripple effect on a lot of different things.
Yeah. Well, and like if you go to Wikipedia, you can go look them up. You do GameStop short squeeze, and that'll tell you the story in detail and give you references and links and stuff.
Right.
You can go and run down there. They'll give you the list of companies that took the ride.
Right.
Were on short squeeze.
Yeah. AMC, American Airlines Group, Bed Bath & Beyond, just for a few, BlackBerry, of course, Build-A-Bear Workshop, shit, of course. But then, there's a bunch down here. Companies, Fossil Group, Genius Brands, iRobot, Cost Corporation. Yeah, it was a lot of different things.
Yeah, and they all pumped as a result of people looking at shorting.
Right.
There was information about shorting, and they looked at it. How can these be that short? This is a good company.
Right.
Well, maybe they are smart and maybe they aren't. I don't know. I can't answer that on an individual basis, these companies. But what I can say is that, your market value today isn't always the value of the company. There's, companies have capital assets. They have customer bases.
Right. They have a name, value in the name.
Yeah.
Lots of different values.
They have a flow. And the flow isn't always as fickle as retail. Sometimes maybe you're an energy production company and there's always demand for energy. So you always have a very consistent base. Or, some of the companies I've worked for before had long backlogs. They had customers that are ready to buy their product for 1, 2, 3 years and they can't buy it because they're waiting in line.
Right.
And this is stability, right?
Yep.
And so when you see that and you look at the assets a company has and then the books that they have, you make different assumptions and you make different decisions about whether or not you would invest in them. That's what makes the market the market.
Yeah.
So, it all depends on your time horizon.
Right.
If your time horizon is really short, then, which is what most people's attention span is when it comes to the market, then you're very day tradey, intraday trade oriented.
Yeah.
Who's going up really fast and where's the big hype? But there's so much more value to be had in crypto and in stock markets by playing a little bit longer game and understanding more about the fundamental aspects that affect the performance of those assets that you want to invest in. Because ultimately, you shouldn't just go and invest in any old, hash graph or DAG or whatever thing that you just the flavor of the day that somebody sells you on, unless you do some homework and understand what does it do and how is it different than everybody else, right? Because it's supposed to be an innovative field. And if we're saying, okay, this thing is going to be a replacement for the dollar, really? You've got a lot of connections. You can outrun the government in terms of, I don't think that makes sense.
No.
Well, there's all different kinds of fields like that when it comes to what people are investing in crypto. You have to look at what are they doing and does that make sense? Right? Does it, like decentralized identities have been attempted many times in the crypto world, and we haven't achieved one yet that really works right. But there's so much demand for a decentralized identity that you can, if you think about it, when you KYC right now, you KYC to say who you are so the government can track you around and stuff. But there are a lot of ways that you KYC that you don't have to give up as much information as you do. When you go to a bar and you have a baby face and they want to card you, you only have to prove that you're 21. You don't have to prove where you live.
Right, your address, your weight.
Yeah,
you
don't have to be a citizen of a certain country to drink in the United States. You simply need to be a certain age.
Right.
So producing a passport from Austria that says that I'm 21 is as good as producing a driver's license from Utah. Or from Florida or from New York or wherever, right? But you don't need to know that I live in New York to know that I'm 21. So if I was able to share with you that I'm 21 in a provable way through my decentralized identity without sharing other information, that's an advance in identity, right? And so you can use that for protocols. You can use that for finance, like decentralized finance type work. But you could also have other real world uses for it. You could prove that I am the holder of an asset, or I am the owner of a real world place,
without revealing how much of that asset you own, how much money you have. Right? Just yes, green light. I'm approved.
Yeah. Like the Flyers Club, right? Like you go to the Flyers Club and the door's locked, and you got to show the thing to the guard there. Well, I could swipe my card without the guard to get in if that was the way it worked, right? Or I could use my association with it. I don't have to give all the extra information. I just have to prove I'm a member.
Right.
They don't need to see my airline ticket.
Yeah, makes sense.
So that one's going to win at some point. And if you found one that you felt you had confidence in, you could invest in that, because decentralized identity is going to take on like wildfire when it works.
We're right.
It's not going to be, they're not scanning my eyeball. Okay. I'm not going for that.
WorldCoin.
Yeah. We're not taking a blood sample and getting my DNA on chain. Okay. I'm not going there either. Oh, by the way, did you hear that 23andMe made a deal to sell all of the DNA information to a Chinese company?
Oh, I'm not surprised at all. I'm so glad I never did that. Of course they do.
Oh my God.
Of course. Right.
Yeah. That just happened like last week.
Oh, okay. Yeah. So everyone that thought they were going to be having their DNA all private information is just basically for sale.
They gave it to the Chinese.
Yeah. For some,
it's more than for sale. It's for use.
Yeah. They didn't buy it for just to data mine it. I mean, they bought it to data mine it.
No, they for sure going to mine it.
But what else are they up to with that?
Yeah.
Nothing good for me. I didn't do it, so I'm not in there.
Yeah. Well, first thing that comes back to me is Wuhan.
Right.
That's the first thing that comes back to me. They're doing genetic experiments there. So.
Right. So they can identify certain traits in people. They can take a whole group of all the bald guys out.
The scary thing is that they might actually be trying to do something that we wouldn't even think about because I don't go there. You know what I mean? Like my mind.
Conspiracy world stuff, right?
Yeah. Like I don't know. Maybe you could find a way to identify something that's unique about
Americans
demographic.
Take out all the blue-eyed guys, because maybe there's no blue-eyed people in China, so we'll take out all the blue-eyed people. China's safe, and we get rid of half of America. Something like creepy, conspiratorial.
Yeah. No, it totally sounds conspiracy. So that sounds like where I leave the conversation.
Right. That's where I join the conversation.
Yeah. No, I get it. I feel like people can't keep a secret, and in my world, most people just blab their guts. So, I'm pretty sure none of my friends could kill anybody and get away with it because they would be busy telling all their friends,
right?
This guy came to the house and I hit him with a shovel and he died and I buried him in the backyard and he's right here by this thing. It's like,
yeah.
Oh my God, what are you saying?
Right, just blabbing it. Yeah,
because people can't keep a secret.
Some people can.
Oh, what are you hiding?
They threaten people. People keep secrets if they're threatened thoroughly or properly.
Yeah, I don't think that.
You don't think so?
I don't think that holds. They might hold it for a while, but I don't think it holds. I'm not a person who believes that most people keep a secret because people they reach a point where the penalty for keeping the secret is less than the burden of the secret. And I think that's the part that
deathbed confessions.
Deathbed confession. What are you going to give me? I'm going to die. Right. I believe in Christ, so I think I'm going to be saved.
Right.
I'm going to heaven, and I've been absolved of my sins and all of this. And the only thing I got left on my chest is this. Oh yeah, the alien thing in Roswell was a fake, and I know because. Or the alien thing in Roswell was real, and I know because.
Right.
Right. The answer to the person is a relief of a burden, and that tells me that secrets don't get kept.
Maybe they don't get kept forever, but look at just during the last pandemic we just had, the most recent, the big one, the big grabber. So how many doctors out there knew for a fact that masks don't work? But once it came down the talking points that they work and everyone knew that it shouldn't, they jumped on board and kept their mouth shut. There was very little pushback, legitimate pushback from people that knew better.
The vast majority of the people who started to open their mouth were threatened by people like the AMA immediately.
It did work. They did you can get people to keep their mouth shut because they kept millions of doctors' mouths shut in this country.
Yeah, but
by threatening, but by social pressure.
But the secret didn't stay secret.
No, that's a good.
That's my point.
So we're both winning this argument. The secret didn't stay secret, but the government can lean on people and shut them up. Because a lot of people didn't push back.
Sure. They shut Epstein up, didn't they?
He's still alive. He's on Elvis Island.
But they shut him up.
No, they did shut him up. Absolutely. Absolutely. And there's right.
My point is that you shouldn't tell me any secrets you want me to keep. No. No, some people can't feel the burden. You know? I'm sure if you're a fan of the Big Bang TV show that you've seen Sheldon squirm about keeping a secret.
No, I've never watched the show.
Oh, you've never watched the show?
That's an example of
I
this,
haven't
right?
seen all of them, but like Sheldon can't keep a secret. And so if you tell him it's a secret, you got to lie or something. He's
going to blab it.
He just can't do it. I mean, like he freaks out. And that's like a personality trait. A lot of people like that choose on him. Maybe it's not so obvious like they play in television or movies, right? But it's a trait to want to share the secret, right?
People get power by that. They do. They feel they want to be the one to share the bad news, or they want to share. It gives them some sort of value to have that unique information. They can't keep their mouth shut.
The jailhouse confession,
right?
Where they put the cop in plain clothes in the cell with the bad guy who they think murdered somebody.
So he loves to brag.
So he eventually spills his guts is the idea.
Right.
Right. They do that because people don't want to keep the secret. They want to share.
Yeah.
We're social animals.
Right. That's true.
This is why I don't think that, that things like alien conspiracy or Bermuda Triangle conspiracy or that conspiracy, I don't think it lasts. I don't think it makes sense. I think there are other answers. And I'm not saying that people didn't feel something or see something or it was unusual or whatnot. Everybody has their own experience, okay? But a lot of things get explained one way and you think it's funky, and you can explain another way and you think it's not. And the Bermuda Triangle is a perfect example. If you look at the Bermuda Triangle as a geographic area on space of the planet of a certain size, and has a certain amount of sea traffic, so ships passing through that area, okay? Now, if you take that triangle and you start moving that around the world and looking all around the world where you have similar flows, then what you need is a record of losses and travels so that you can see if it's representative or if it's lower than the Bermuda Triangle. Okay.
Yep.
And so there was a study done after this whole big thing about the Bermuda Triangle went on for years and years.
Yeah.
There was a study done, and I think it was about 10 or 15 years ago.
Mm-hmm.
They went to the records of Lloyd's of London, who's been insuring trips at sea for 600 plus years.
Okay.
And they paid for a study through the records.
Okay.
And what they did was they first analyzed traffic, sea traffic. And they said, here's some other areas that are representative.
Similar type sea traffic.
Of Bermuda Triangle sea traffic.
Okay.
Okay. And so that, like, one off the coast of Africa, one over in the Indian Ocean. And they went and they started making a list of the boats that made it and the boats that failed.
Okay.
Okay. And when they were all said and done, and when we went to talk to the guys that did the research at Lloyd's, and they were like, they were completely happy that they were vindicated, that their actuaries were right. And what they said was, there's no discernible difference between them. And if there was, we would have charged more.
Right.
And they didn't charge more. They charged by the mile and by the route.
Right.
Right. And they figured that out by their losses. And so they were running the statistics for hundreds and hundreds of years.
Yep.
And what they found out was,
no big deal.
Go.
It was the same.
Just go.
That's because insurance companies run the world.
Well, they're amazingly good at risk assessment.
Of course, they are.
That's their bag,
That's
right? And that's why actuarial services are incredibly valuable for conduction of business, because they can look at your business and say where your risks lie.
They faked the moon landing.